Thursday, July 6th, 2017, Monaco 64, home of alternative economics and contrarian views. So, yeah, I say I'm the home of contrarian views, and what better contrarian, idea to have that commodities are actually bottoming right now. And the reason why I'm making this video, and I usually don't make videos about commodities. Of course, I do gold and silver, which are monetary commodities, but I haven't really touched upon too much on the other, soft commodities, base metals, or energy. And probably because, the commodities have been downtrodden the last few years. I know there was a little bit of a rally from around 2009 to 2011, 12. But since then, the commodities markets have been on a downward trend. And oil, we got down below 30 a year or so ago. We now can't seem to break up above 50. And one of the things that triggered me to do this video about commodities is a story I saw, I think it was yesterday, on Zero Hedge. And it says, Goldman's commodity unit suffers worst Q1 in a decade. And it goes on to say, the fate of the commodities business was one of the items on the agenda of a recent board meeting in London in late June. Bloomberg's sources said on the condition of anonymity. Goldman Sachs has not reached any decision regarding the unit and may not be overhauling the commodities division, according to one of the Bloomberg sources. It is a common practice for a bank to review performance of divisions that are not doing very well. So here you have an article saying that Goldman Sachs might actually be thinking of cutting down on its commodities unit. It might not be. It may be just reviewing it, but usually that's a signal that we are near a bottom. Especially since I've worked in the city for over 20 years, I always remember sometimes investment banks or brokers were getting rid of staff. They, let's say equities are in the bear market and they said, oh, we're going to get rid of our stockbrokers. And then 6 months later, the market picked up and they had to rehire people. So this is what got me to look into this. And in the major index for the commodities is the CRB index. But now it's being changed and it's called the Continuous Commodity Index. And it derives from the CRB index. And I'll read a little bit about it. It says, the CCI stems from the original CRB index created in 1957. It is a snapshot of the index at its 9th revision in 1995. Before it underwent weighting and rebalance changes in the 10th revision. It is sometimes referred as the old crib, CRB. So, and these are the major sectors in the CCI. It's 17.65% energy, 23.53% metals, 29.41% softs, and 29.41% agriculture. It's interesting because when I started out looking at the markets, I actually went, when I was still, before I started working, I was still at university, I went to visit someone in Geneva. They had a brokerage office, and I was introduced to a broker, and he was showing me all this, the markets, and I was asking about futures, options, and he said how futures are a lot riskier because, you have to put a lot more money down and you don't really know how much you're going to lose if you shorted. Then he explained to me about options, how you can just buy a put or a call and you limit your losses. And I actually did a trade. I opened a little account and did a trade on coffee options. So I don't talk too much about commodities, but yeah, I have followed them and I have been involved in them. for many years. So now, you know, I want to talk about the relationship between commodities and the US dollar. And there is a strong relationship, mainly because the US dollar has been the reserve currency for the world monetary system since 1944 with the Bretton Woods Agreement. And usually when the dollar is weak, commodities are stronger, because a weaker dollar means stronger, you know, a dollar that's worth less means that everything that's real is worth more. And I want to go back and look at this chart from it's the CRB Index, which is also called the CCI now. And this is going back to its inception in 1957. And you can see that in the 70s, just after the US went off the gold standard and the dollar, you know, went on a one-way street downwards until Paul Volcker came in 1980. You can see that the CRB went from 100 to over 300 in the space of less than 10 years, about 8 years. So as the dollar weakened, you know, the CRB and commodities went up. And the reason I'm looking at this chart is because nowadays a lot of the analysts say that if we have a recession coming up, commodities are going to go down, you know, and we're not going to go up. But commodities can go up in a recession. You know, the 1970s is a period of rising prices, high unemployment, weak economic growth, you know, a lot of recessions, intermittent recessions. So it wasn't a great period, and commodities went up mainly because the dollar went down. So all the people right now who say we can't have a recession and a bull market in commodities could be wrong. I could be wrong as well. But the 1970s proves that it is possible. So that's the first chart I wanted to look at. And now I want to look at a couple of charts of like wheat and also corn and coffee. Because I read an article a few days ago that, you know, that wheat and oil and corn had been doing very well in the last few days, and it's been years since, you know, I followed wheat or corn. I have actually done trades in those commodities myself, but as I said, you know, the commodities have been more abundant. I haven't been following them. So I'm going to bring up a chart of wheat first, and you can see here 2008 wheat did very well, went up to over $13, and you know, that was the top basically of the commodities boom from you know, 2000 to 2008. And then you had the, you know, the and then it topped, and it actually bottomed in you know, early 2010. And as I said earlier in the video, commodities rebounded, you know, up until 2012, 2013. And since then, as you can see, look at wheat, how you know, bearish that's been. And we traded below $4, which was the lowest price since, you know, around 2005, 2006. And as you can see now, I read this article that wheat had limit up days last week or something like that. And lo and behold, look at the chart. It looks like we're breaking out of this trend line that's been, you know, a 9-year-old trend line on a wedge. So that looks really interesting, wheat. And then I had a look at corn. Bring up corn. Corn, I mean, it hasn't really, the chart is quite different. We topped as well in 08. And then we bottomed in 2010 or thereabouts, and we've rallied, and then now we've come down, and we've held that $3 mark there, and now it looks like it's trying to bounce back, corn as well. The other interesting about commodities is they're very cyclical, mainly because when prices are up, producers increase production to try to maximize profit. And when that happens, supply increases, and with bigger, larger supplies, it forces prices down, and then, you know, it's very cyclical. And then the prices go down, producers cut back on production, and then at a point there's not enough supply, and you know, and demand is picking up, so prices, you know, start going up, and it's very cyclical. Let's have a look now at coffee. The first commodity I traded on, I did an option on coffee. It was at the time traded in the Coffee and Cocoa Exchange in New York. I think they're part of the CME now, unfortunately. But there you have coffee. This is more of a shorter term chart going back to beginning of 2016. But you can see coffee has been one way down. Maybe that's why also, you know, the Brazilian economy hasn't been doing well. Dependent a lot on commodities and coffee. But you can see that recently coffee really spiked lower, really strong, you know, kind of dumped there in the middle of June to 115 cents. But ever since then, it's made a fairly strong rebound back to around 130. So that looks quite interesting, coffee. Now let's have a look at copper. Copper is another interesting commodity because it's kind of a bellwether for the economy and housing and construction. You need a lot of copper, you know, when you build a house. This chart is a July copper. I couldn't get a continuation chart. This is high-grade copper on in the CME. You can see there as well, January 2016, copper bottomed around $2, and it's actually been in kind of a bull market since then. I know it hasn't done much since November last year, but that looks like a market that might have bottomed. It's a little bit similar to gold. Gold bottomed in December 2015, so copper bottomed a little later. I'm not bringing up gold and silver charts because I've done those many times, and I want to focus now on other commodities. So let's bring up oil, which is the energy commodity that most people talk about. And the same thing, kind of same pattern as wheat. You know, we had that big rise in oil in 2008, and then we came down strongly there. We went up to like 150, dumped below 40, and then we rallied back in towards 2012. We stayed around 80 to 100 there for a few years, and then, you know, about 2 years ago, it just dumped. We went, I think 27 was the low there, beginning of 2016, but since then, oil's been going up, so it actually bottomed in the beginning of 2016 there. I know we've gone back above 50 and now we're back below 50, but it has bottomed, just like copper and gold bottomed around the same time. So that's oil. What else have we got here? Let's look at this continuous commodity index. And I'm going to look at first a longer term chart going back to 2008. So you can see that it topped there at 3750. I think that's the equivalent of 375 or a bit more on the CRB. They're the same index now, but different prices, different name. And as you can see, we rallied back there towards 2011, 2012, and it's been a one-way street down, you know, and no one talks too much about commodities. It's more, you know, the NASDAQ, the stock market, the bond market, cryptocurrencies. And you can see there also that the CCI, or the Continuous Commodity Index, bottomed around 17.5 in the beginning of 2016. So even though people, you know, we're talking about being a bear market, we actually might not be in a bear market anymore in commodities. We might have bottomed, you know, over a year ago. And you can see there we try to go down there recently, and we've come back up. But I'll show you now a shorter term chart which shows you that better, a lot better in the short term, this CCI. You can see the bottom there in January 2016, and recently it just dumped as well and broke this trend line. But now it's rebounded quite sharply. And we have to see, you know, whether this continues higher. Of course, markets never move in one day or a week, but it's definitely above that January 2016 low. And now to finish off, I want to look at the dollar index. As you can see here, 2008, the dollar bottomed there just around above 70. That's when commodities topped. And ever since then, I know we've had ups and downs. Ever since then, the dollar has been on an upward trend. Commodities have been on a downward trend. It looked like the dollar had topped in the end of 2015, beginning of 2016, just like the commodities have bottomed. But we actually made what I think is a false breakout late last year, you know, above the 100 level again towards 103.50. It looks like now we're going back down. So this could actually, you know, sometimes the things don't move in tandem. It takes time. For example, commodities look like they bottomed in the beginning of 2016. But it took the dollar a little longer to top. And it looks like it could have been a false breakout. It's just like in the 80s, gold and silver topped in January of 1980, but the mining stocks actually continued rallying, I think, for another 2 years. So, yeah, that's what I wanted to talk about, a little bit of contrarian market sentiment on commodities. Are we bottoming in commodities? Is it possible to have a bull market in commodities even if we're going to have, you know, a recession or economic slowdown? I definitely think it is possible, as you saw earlier from my chart in the 1970s. So if you enjoyed this video, give me a thumbs up, share it far and wide, subscribe to my channel. Watch my videos also on steemit.com, STEEMIT.com, and follow me on Steemit as well. If you'd like to donate to my channel as well, there's some links below in the description. I'll talk to you later. Bye.